Hey guys, it's Greg here. Just wanted to reach out because we had some crazy news yesterday, actually last night. While I was at home, I had some alerts come up on my phone saying that interest rates were going to be imposed a specific hit from Fannie Mae and Freddie Mac. Those of you who don't know who Fannie Mae and Freddie Mac is in the mortgage world, they back they're government-sponsored entities that basically write the rules of underwriting for the standard conventional mortgage. So that's anybody who's doing a loan that doesn't need to just prove off of bank statements or assets or has a jumbo loan, or those government loans like FHA or VA loans. So, and so on and so forth, right? So the average loan is typically backed by Fannie Mae or Freddie Mac and underwritten to their rules. They imposed a little bit of an increase in cost, came out of nowhere. Nobody anticipated seeing these things happen. This happens in a market. And so we saw a jump in interest rates today. Already rates were kind of moving up towards the end of the week, or this week. It's only the middle of the week or towards the end of the week now. But this week rates have gone up a little bit. We have normal ebbs and flows of the market. This increase in rates probably knocks us back maybe about a month of a really good trend that we've been in. So it's just part of the natural ebbs and flows of the market. So as you see news that rates have gone up and there's a lot of urgency about, catching rates now, we should, but I wouldn't be scared that rates are going to start going up much further than where they are right now, if not recover to where they were maybe a week ago or prior to the beginning of this week. So I'm going to just run a quick chart with you guys and show you kind of where we are with the market. I always do like to take a look at just the bond market, and that kind of gives us a good idea of what to expect through the market. So here's about a 5-day report here of, well, maybe a little bit more than 5 days, almost a month here of where we were for rates, and we were enjoying a very good time, some pretty good lows, and then we had this week start happening, and then last night's news where the market is at 719, and it was as low as 5 something, right? That doesn't mean rates went up by 2% or anything like that, but it just means that the rates are up and down. There's no algorithm that you can use to figure out exactly where rates are based off this chart. I just use it to follow market trends. Now I'm going to show you a little bit of kind of where the market and how it moves. 3 months ago, at the beginning of June, we had a spike in rates, but rates are still really good. So we just enjoyed a little bit of a dip and a good time, and rates are just going to come back up a little bit. So even if you have a loan in process right now and your rate's floating, just get the loan processed and see where the market is, because it's likely to come back down and we're going to recover a little bit, especially the stronger lenders. Stronger lenders out there are going to be able to fund out their pipeline through this month without being imposed a huge loss from these imposed costs from Fannie Mae and Freddie Mac, because that's what this is an imposed cost from Fannie Mae and Freddie Mac. And I think we're going to be just fine. So I would still look at doing a refinance. And even if you're looking at right now's rates and you're floating it in, it's likely that we're going to recover. That's my gut instinct. And that's the instinct of, my mentor and the people that I speak to in the market feel about it. So, don't fret. I think that it's still a great time to take a look at rates, and you could still probably get a rate at least a half a point, which is usually your earmark to lower your rate and not have to pay a ton of money in closing costs. Reach out to whoever your loan officer is. If you'd like to reach out to me, my contact information is always available to you. DM me, find me on my Facebook page, or call me 949-771-6719. And I'd love to help you out or answer any questions that you have. Other than that, let's just keep things rocking and rolling. And it was always good to talk to you guys. All right, bye-bye.